Disability income insurance is one of those topics that sounds harder than it really is. In this video, we'll break it down in plain English for the New Jersey Accident and Health Exam.
All right, so you're gearing up for that New Jersey Accident and Health Exam, right? And you know that big topic, disability income insurance, is definitely going to be on there. Well, in this explainer, we are going to crack the code, make it super simple, and get you feeling confident for test day. Let's jump right in.
So here's our game plan. We'll kick things off with the big idea behind this insurance. Then we'll look at who it covers, how it helps keep businesses running, and then we'll get into the nitty-gritty of defining a disability. After that, we'll talk timing and wrap it all up with a quick recap of everything you've got to know.
All right, first things first. Let's get right to the heart of it. What is this insurance actually for? Why does it even exist? It's all about protecting what is probably your most valuable asset.
Think about it. Your ability to earn money, well, that pays for everything, doesn't it? The mortgage, the car, the groceries. But what if, all of a sudden, you get sick or hurt and you just can't work? That income stops. How do you keep your life moving forward? That's the exact problem that disability income insurance was built to solve.
And here is the absolute most important point to get. This policy is not about paying your doctor or the hospital. It is all about replacing your paycheck. It gives you a stream of income paid directly to you so you can keep paying your bills while you get better.
Okay, pay very close attention here because this is one of the biggest exam traps you'll see. Do not get these two confused. Medical insurance pays the providers, the doctors, the hospital. Disability income insurance pays you. It protects your income. One saves you from medical debt, the other saves your lifestyle. You have to know this difference.
Okay, so now that we're clear on what it does, let's talk about the two main ways that people actually get this kind of coverage.
For your exam, you're going to need to know about both individual and group policies. They both protect against the same thing, but they have some really important differences. An individual policy is pretty straightforward. It's yours. You buy it, you own it, you control it. And if you get disabled, those benefit checks come straight to your mailbox. The great thing is, it's portable. It goes with you even if you change jobs. Group policies, on the other hand, are what you usually get from your job as an employee benefit. The company owns the master policy, and you're covered as a member of the group. It's a fantastic perk, for sure, but the thing to remember is that the coverage usually ends if you leave the company.
Now, this insurance isn't just for individuals. It's also an absolutely critical tool for keeping businesses afloat when a really important person can't work anymore.
Okay, I want you to burn this slide into your memory because it is a gold mine for exam questions. First, you have business overhead expense, or BOE. This policy keeps the doors open. It pays the rent, utilities, employees' salaries, everything but the owner's salary. Next, business disability buyout. This has a totally different job. Its sole purpose is to give the other partners the cash they need to buy out a disabled partner's share of the business. And finally, key employee coverage. Protects the business itself from the financial loss of a vital employee. The number one trap, mixing up overhead and buyout. Don't do it.
Now, a policy is only going to pay you if you meet its specific definition of disabled. And that's not always black and white. So let's break down the three key definitions you're going to see on the test.
Total disability is the easiest one to understand. It just means you are completely unable to do the main duties of your job. You're out of work, period. This is what usually kicks off a claim.
But what about when you start getting better? You're not totally disabled anymore, but you're not 100% either. That's partial disability. It's for when you can go back to work, but maybe only part-time or with lighter duties. The policy pays a smaller benefit to make up for your smaller paycheck.
And now for a really subtle but super important one, residual disability. With this, the focus is all about the money. It pays a benefit based on the percentage of income you've lost because you can't work at full capacity. The key word to remember here is income loss, not just being unable to do your job.
All right, we're in the home stretch. Two last critical concepts that are all about timing. When do the checks start coming and how long do they last? If you get these two straight, you're looking at some easy points on the exam.
So the elimination period is just a fancy name for the waiting period. The best way to think about it is like a deductible, but for time. You have to be disabled for that whole period, say 90 days, before the insurance company pays a dime. Once that wait is over, the benefit period begins. That's the payout window. It's the maximum length of time you'll get checks, whether that's 2 years, 5 years, or all the way to age 65. So remember, waiting period versus paying period.
Phew, we have covered a lot of ground, so let's lock it all in with a quick hitter recap of the absolute must-knows for your exam day. First, let's talk taxes. This is a big one. If you pay the premium with your own money, after taxes, then any benefits you get are completely tax-free. But if your employer pays the premium for you, like in a group plan, then any benefits you get are usually considered taxable income. This is a classic test question.
And here they are, the 4 biggest areas of confusion. 1. DI is for your income, medical is for your bills. 2. Business overhead keeps the lights on, business buyout buys out a partner. 3. Elimination period is for waiting, benefit period is for receiving. And 4. Know your definitions for total, partial, and residual disability. You master these 4 and you are going to be in excellent shape. So, let's end with one last pop quiz. Which policy is built specifically to fund a buyout agreement for a disabled partner? If you immediately said business disability buyout, you are 100% correct. You've got this.